Prices will this time next year definitely higher than now. I can see it, but I can see another crash or a slow bleed this year. I think we can certainly test those lows.
Hey guys, welcome back to Library of Wealth. Today we have Guy from Coin Bureau and Benjamin Cowen from Cryptoverse discussing Bitcoin's future amidst the uncertainty in the regulatory and economic landscape. Guy expects Bitcoin to rise north of $30,000, and with sentiment building up to the halving, he anticipates another crash in 2023. He says there's a possibility of testing the lows, but thinks regulatory or macro improvements will not be enough to push the price past $40,000 by the end of the year. Guy and Benjamin also warn that the next pivot could have a significant impact on the economy in the coming months. Let's get right into the interview as they discuss the latest update for Bitcoin and the crypto market in 2023. Before we dive in, don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
My best guess for Bitcoin would be, it's quite a wide range, between 30 and 40K. I haven't got the courage to narrow my range as much as Ben has, so I'm playing it very safe there. I think the excitement sort of building up to the halving, I think that can carry it sort of north of 30K. But I don't think, even if we're hearing noises about QE, even if the general overall macro picture looks better, even if the regulatory landscape looks better, I don't think that'll be enough by that point to push us, anywhere past 40K. But certainly, I think it's realistic to expect that sentiment could have picked up enough to be within that range by then.
I don't know if we're going to go higher than what you guys just said, 30 or 40K, because I gave a prediction in 2020 that Bitcoin would go to 150K. That didn't happen whatsoever. But I will say this: I think that if regulation, if it hits its tone and we get some kind of clarity, that'll boost a little bit. The war in Ukraine, I don't think it's just like the war in Iraq and the war in Afghanistan. It's just background noise as time goes on. Unfortunately, I have to say that. And we were in Afghanistan for 20 years. I don't think it's going to be that big of a thing in the market. It's going to be awful for the people over there. But as far as like price action, the thing that concerns me is what we just talked about, the pivot. If they pivot and it's not this year and it's next year, that means that the economy has really taken a big hit and they broke something. And it's going to take a little bit of while for them to bounce back. So maybe this time next year, it might be even worse off than we've seen beforehand. So I'm going to take a contrarian view, but I will just say this. I think I'm biased again because I'm dollar cost averaging and I want these things to go lower. And if it does, that's better for me. So maybe I'm wrong on that one, but it's just the truth. Can you answer this question? If all the collapses had not happened last year, FTX, BlockFi, Voyager, Celsius, where do you think the market will be today? It's a good question. And because we only went as low as 17,000. So do you think that we could have gone higher if it wasn't for just the shenanigans that were being played in the background with Three Arrows Capital and everything that happened before?
I think perhaps we wouldn't have experienced quite the pain, quite the drops that we did last year. But I think we would still be going pretty low because of what the Fed's doing and because of inflation, etc. But it certainly wouldn't have been as painful as it was. But of course, on the flip side, if those things hadn't happened, all that crappy money would still be kicking around in the system. It would just be lining us up for an even more painful crash later on, perhaps. So I think perhaps although it was painful, it was necessary. I'm glad we've got it out of the way. I hope that's it.
Ben thinks that the market would have been higher if the collapses of FTX, BlockFi, Voyager, and Celsius hadn't happened last year. He points out that the crypto market bottomed in June, while equities did not collapse during that time and continued to move higher. However, Ben believes that the market is fighting a losing battle until we see a pivot by the Federal Reserve.
I think we could, if you think back to where crypto bottomed in June, and then where equities bottomed in October, and crypto was at Bitcoin was at 21K, and then FTX collapsed. But equities did not collapse during that time. Actually, equities continued moving higher. And part of that, I think, is because net liquidity was moving higher from September up until about late January. Since then, it's been moving back down. So fair warning. But I think it could have been higher. I mean, you could have already seen Bitcoin tag slightly higher prices. But this goes back to the idiosyncratic risk of every individual asset class, right? So yeah, it could be just a bit higher, but I still think at the end of the day, we're fighting a losing battle until the Fed pivots.
Would you guys admit to being too U.S. centric in your economic analysis? I'll just say for me, because I'm a homer, I live here, and I will just say that it's because it's the things that I know, and that's one of my faults. Sometimes I take a view as an American citizen only, and not in different places. So yeah, I do, but you got to remember, I mean, if America goes away, it's not like crypto goes away. It'll just vacuum over to another place. It's just that we lose a big chunk of funds because America is the richest nation in the entire globe. So what do you guys think?
I am happy to. Yeah, I do admit I probably am a bit too US centric. I should look elsewhere, especially as I'm now based in the Middle East, which is where so much of the adoption is happening. So perhaps I should focus on that. But again, you can't get away from the fact the world very much follows what comes out of the US. So I mean, we have discussed this, my team and I, before. It's like, should we cover what the Fed is saying this week again? It's like, well, yeah, because the effects are going to be felt. And if we felt that wouldn't be the case, then we wouldn't cover it. But yeah, I mean, I do admit we do focus on this a lot, but for good reason.
Ben, anything on that one? Just like, yeah, it's true.
No, I mean, maybe we should talk about more about other countries. But at the end of the day, I mean, like, the U.S. economy is the strongest, and that's where a lot of the money is. So, I live here. It's what I'm surrounded by. Yes, maybe I'm an ignorant American, but I mean, this is where a lot of the stuff happens. So I think it's important to focus on, and also I would say too, like, I focus on what I think I'm actually better at understanding. Like, I would not be great at talking about, like, monetary policy coming out of China or other places. Like, I don't spend as much time studying it.
That is true.
When it comes to economic analysis, Guy admits to being US centric, but acknowledges that the US's economic performance has a significant impact on global markets, especially cryptocurrency. Guy believes that the crashes were necessary to prevent an even larger crash later, but is concerned that the economy may take a while to bounce back if something is broken. Ben also believes that the US economy is the strongest and where a lot of money in the market is. Despite their different perspectives, they agree that Bitcoin and other crypto markets' future is closely tied to the actions of central banks, regulations, and global economic conditions. What do you think about the latest interview with Guy from Coin Bureau and Benjamin Cowen from Cryptoverse, and where Bitcoin and the crypto market is headed in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.